Hey everyone, it is Monday, October 10th. We're back live with the final bar. We'll talk about this V-shaped day, but overall finishing net negative from Friday's disastrous decline to the downside. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the chief market strategist here at StockCharts.com in a cloudy Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using StockCharts. The StockCharts team is very much still working through the high that came off of ChartCon 2022, which was our first virtual conference in a number of years. It was last Friday and Saturday. We had so much fun talking with some of the top technical analysts and traders in the business, Linda Raschke, Larry Williams, Ralph Atkimpor. There's a moment where I had Ralph Atkimpor, Martin Pring, and Larry Williams in a little discussion in our office. It was awesome. And there were so many fun little moments as the presenters were coming in and off of the new StockCharts TV studio. That is just the beginning of a lot more great content we have coming for you. And this show I am excited to get back to because we had to put it on ice for a couple days. We're back live today. We have great guests this week, by the way. We're coming back strong tomorrow on the 11th. Tuesday, we have Bob Lang from Explosive Options. On Wednesday, the 12th, longtime StockCharts contributor Arthur Hill joining us from Belgium, sharing some charts from his toolkit. On Thursday, the 13th, Katie Stockton of Fairlead Strategies, a new fund manager at Fairlead Funds. They launched their ETF earlier this year. We'll talk about that along with other things as well. Let's continue on our show today with our market recaps. I mentioned sort of a V-shaped move to the day today. It's funny, a lot of the conversations at ChartCon were about the overall bearish environment we've been in, sort of, differing layers of bullishness or bearishness from, very negative to the measured negative. Then Larry Williams came in hard with a very bullish argument right at the last event of the 2 days. And I got to have a Q&A with him and I was talking through it. So I was very interested to see what would happen at today's session. Bond markets closed. So, bonds didn't go down today. So that's good. The bad news is because the market was closed for Columbus Day, sort of the traditional holiday on Monday, back open tomorrow. But equities sold off really in the morning, just continued, picked her up right where they left off on Friday, trading lower off of 36.40. Almost got back to net positive, and the Dow actually just barely went above Friday's close, but at the end, all of them rolling over going into the final trades of the session here. So the S&P down about 0.75%, not a bad day, but certainly not materializing any upside. Nasdaq down about 1%. We're going to look at some of the FANG stocks, or what I call the phenomena stocks, a little later in the show today. When we talk about shifting stocks, we'll look at some of those names. 3 out of those 8 stocks making a new 52-week low today. The VIX continuing to push higher, right? It had been below 30 just briefly, I think, last week. Now rotating back right above, close to making a new swing high yet again. Other asset classes here very, very quickly. As I mentioned, bond market's close, so not a lot to update you on there, but we will tell you that the dollar moving higher, right? So the UUP, the dollar ETF, above 30, it's about 0.4% higher than where we were on Friday. Commodities actually opened stronger, but rotated lower through the course of the day. The DBC, which is a broad commodity index, very energy heavy, but a broad commodity ETF down, finishing at the lows of the day, just over 1% lower. Gold and silver really continued to push lower as well. Copper and corn, the only out of those top 8 that actually finished positive. Most of the cryptocurrencies that we track continue to push negative. Bitcoin briefly above 20,000. That was over yesterday's session, over the weekend, but moving lower through the course of the day here. Currently just around 19,200. Ethereum just above 1,300 as well. Let's look at a chart of the S&P 500 to just see where things are at. So, really close to making a new intraday low for the year. It didn't quite get there. Very close to making a new closing low for the year, but didn't quite get there. just over a week and a half ago. That was so far still the low for the year. That was the last week in September. We're rotating back right back there. So it was interesting as we were preparing for ChartCon. We came off of the lows. That was, I think, last Friday, not last week, Friday, the Friday before. And then Monday higher, Tuesday, Wednesday, Thursday, had this sort of island reversal, right? We have a gap higher. You sort of chop around there, and then a gap lower. That's called an island reversal. It's a bearish sign, basically telling you that we gapped higher, but then just went right back and eliminated all of that upside. So right now, you basically unwound that nice little bounce we had last week where it fell. I mean, just for a brief moment, you hear some bullish calls. You get a little sense of optimism. We came out of the oversold region. I think Friday and then today is just a friendly reminder that we're still very much in a bear market phase. And I think it's tough, to be honest with you. A lot of the questions I asked of Larry Williams, of people like Joe Rabel and Tom Bowley and others who I think are I think very highly of in terms of a disciplined technical process, great investors and educators over their careers. And for them, talking about differentiating the short term and the long term. And the fact remains, if you want to understand the overall trend, you have to think longer term. You have to think bigger picture about what has really changed. And I think that's what we learned, at least I learned from last week, is a brief gap higher really ended up being a brief signal. If you take a step back, you can see we're essentially still testing the lows from June. When that changes, we can get pretty excited. We haven't changed it yet. Just to finish up our market recap, see where we're at today. And as a reminder, Monday, we have three general themes to the show. We start big picture, talking about the overall rotation of things. That's what we're doing now. Next, we'll get into sectors, and then we will get into individual stocks after the break. So I did want to briefly just touch on two things, if I could, particularly in terms of sentiment. I mentioned the VIX going back above 30, and this is the chart of the VIX going back for the last 2.5 years. You can see this general range we've been in with the VIX. The lower end of the VIX in this year have been around 20. The upper end has been about 30, 35. We're once again back above 30. That's that orange shaded area here. Now, all the major bottoms in 2022, really going back to November of last year, have been with the VIX above 30. But what you have to remember is, we first dipped above 30 or jumped above 30 in third, fourth week in April. We had a couple more weeks of the VIX really remaining elevated, and stock prices continue to go lower. That was about 2 months almost before the June low, before it actually came in. So just because the VIX went above 30, that doesn't mean the end is near. That does mean that you're, finding similar conditions to what we did at bottoms. It tells me to look at the price action and focus for the right indications. I see last week at this point as being yet another lower high, which is more confirming the downtrend way more than it's actually suggesting further upside potential from here. Looking at the major cap tiers, this is a chart that we've highlighted many times. All of these are color-coded red, which is my very subjective and simplistic analysis, just looking at the trends in the cumulative advanced decline lines. Are they positive or are they negative or are they neutral? And I'll keep them a neutral color if I see that the case. When I'm looking at these charts, I see a series of charts that have made a new 52-week low, and now they're sort of chopping around after making that breakdown. Brief move back above the low for the year, but now once again, sort of rotating to the downside. These haven't quite been updated for today's close yet. I would imagine, given what I'm seeing, you'll see all of these rotate lower. Although we'll have to see as we process the closing data. Again, get excited when these stop making new lows, not when they're bouncing off of a new low. That's sort of a more of a concern than anything. Finally, just to note, as of today's close, and these are updated for the close, we're back down to around 13% of the S&P members above their 50-day moving average. The S&P itself is well below its own 50-day moving average. This might be an important chart to watch, just because if you do get a bounce like we see last week, this is an important chart to watch, because when this indicator gets back above 50%, that tells you that an uptrend is really materializing. It's not just a dead cat bounce, but something broader and more significant, more likely. Last time that happened was going into the August high, which ended up being about a 2-month rally. That's a decent rally, right? That's when we want to obviously understand and interpret. Last week was not that, right? It was more of a brief bounce, still very much these breadth indicators, and most of them, if I would summarize it, very much still in the bearish camp today. Our next segment is called Sector Setup. So we talked about the big picture. Overall, the major average is very close to making a new low for 2022. Conditions of breadth and really sentiment, I think, mirroring that overall bearish feel to the tape after Friday's real acceleration downside. And again, I can't tell you how fun and challenging it was for me and all the presenters to put on an event like we did as the market was cratering. There's actually a lot of really interesting discussions that came out of that, which was a lot of fun. But our second segment on today's show is sector setup. So what we like to do is start with the RRG, the relative rotation graph. Julius DeKempener was in our office here in Redmond all last week. Had a lot of fun meetings with him talking about sector rotation, asset rotation, talking about some of the places we can take the RRG and other visualization tools on StockCharts.com. So, a lot of really cool things to come. Julius was talking with some of our data team, our developers, and a lot of good will probably come from all of those conversations. But I did want to highlight at a high level on the weekly RRG, look at how strongly energy is rotating to the upside. Energy, not one of the better sectors today, but overall, it's very much been a rotation back to what the first half of 2022 felt like, right? You can almost separate 2022 into three segments. You had the first 6 months of the year, really from January, really November of the previous year, all the way to mid-June, which was sort of value over growth, and energy and sectors like energy doing very well, even on an absolute basis, while the benchmarks were struggling. Then you have June through August, which was a complete reversion from that. You had energy ripping to the downside, growth stocks ripping to the upside, completely reshifting the dynamics here. The daily RRG in particular rotated very quickly. Now we're right back to sort of that same thing. And look at energy sort of coming. Let me actually move out just a little bit here. So you can see energy sort of way down in the weakening quadrant, right? Kind of coming north. And then in the last 6 weeks, just really pushing up. Now one of the few sectors firmly in the leading quadrant and heading northeast, which is the direction of improvement, right? That's actually strengthening. What else is in the leading quadrant? Only three other sectors: financials, industrials, consumer discretionary. Now look in the direction of energy, material, sort of pushing up into the right, sort of reinforcing that strong relative trend and strong momentum, versus consumer discretionary really rotating to the downside. Still one of the leading sectors, still having decent relative performance, but the momentum very much waning, right? In general, ideally you want things that are rotating northeast and they just tend to stay to the right of the y-axis. Those are the things that I found have tended to be pretty strong, because that means they're outperforming overall over time, but just rotating on a cyclical basis in that outperformance, right? It's either they're really outperforming or they're kind of outperforming, kind of drawing back a little bit. So worth noting energy, also healthcare, which is actually rotating northeast in the weakening quadrant as well. That might be one of those emerging areas to pay attention to. Just real briefly, I meant to check in on what happened today. Industrials finished at the top, which is interesting. Some of these shifted around through the course of the day. Utilities actually started the day at the top. Came off a little bit, but only four sectors finishing in the green. Industrials, consumer staples, both up about 1/3% after that. Materials and utilities on the downside. Energy giving back 2% on the XLE. Technology down 1.7%. Real estate down over 1% as well. REITs have been a tough place. And we surveyed a lot of our attendees to prepare for our market outlook event on Friday on ChartCon. And real estate was, I believe, the most commonly the highest poll getter in our survey for worst sector between now and year end. Real estate was number one, if I remember right, along with some of the other sectors as well, like utilities, if I remember right, was up there as well. Let's look at the 11 sectors using the candle glance function. So again, this is sort of a really cool function that allows you to take a series of charts, throw them on the screen at once. These are the 11 sectors, and then the S&P is on here as well for reference in the bottom right. What I like to do when I'm looking at this chart is just sort of start at a high level, literally take a couple steps back, lean back from your monitor, and just look to see what looks similar and what looks different. Any outliers that jump out, any charts that look different than the rest of those. If you take a moment and look around, I think you'll see what I'm seeing, which is energy is certainly an outlier, right? While most of these sectors are at or near new 52-week lows, or certainly at the low for 2022. Energy is a notable exception to that. It's actually testing a new swing high. The XLE had rallied. Let me zoom out just for a second. XLE rallied up. Previous high was around 83, 84, kind of pulled back from that level in late September. broke just briefly below the 200-day moving average, now back above and testing that same resistance level. Boy, I'd love to see it get above that 83, 84 peak in late August. That's where the S&P sort of hit the 200-day moving average and rolled over. Energy sold off pretty good there in August into September, but now rotating back to the upside really, really well. Love to see if it can get above there. That would be certainly unique relative to the other sectors to see it, breaking to a new swing high and maybe approaching the highs you saw in June, back around just above $90 a share. Now, which of these are making new lows? These are the sectors ideally you probably want to avoid, right? In general, I'm not a fan of owning things that are making new 52-week lows. This is what concerns me about owning stocks in general. It's why I'm still very much risk off and defensive in my own positioning and my own interpretation of this market environment. Here are the sectors that are at or near new 52-week lows today. Communication services, which has been pretty much in that situation most of this year, remains so. Consumer staples coming off of a new 52-week low on Friday. Financials have bounced off of that 30 level. And some of the financial stocks potentially interesting. By the way, on an earnings basis, you have a number of the big banks reporting this Friday. JP Morgan, Morgan Stanley, Citigroup, Wells Fargo, US Bancorp, PNC, some of the regional banks, First Republic, all reporting earnings this Friday before the open. This is going to be the beginning of more and more earnings that are going to come out into the next couple weeks. That might be a really important chart to watch as they are testing new 52-week lows. Technology and real estate, the others that are right there. Technology, obviously a really negative sector. When we come back from the break, we'll look at some of those FANG stocks. 3 of the 8, as I mentioned in the introduction, all making new 52-week lows again this week. We'll come back from the break and talk about shifting stocks. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. It's great to be back with you live today on Monday, October 10th. Hope you guys are all doing well and enjoying this experience of 2022. It has continued to be a fairly bumpy and challenging ride, I know, for many investors. We're here to help you. A couple quick announcements before we continue on with today's show. First off, we welcome your questions. We'll do a mailbag on tomorrow's show, another one Friday, end of this week. We'd love to feature one of your questions live on the air. You can get your questions to us via email, thefinalbar@stockcharts.com, on Twitter @finalbarsctv, and on YouTube. Put a comment below the video you're watching on our Stock Charts YouTube channel. We'll gather all those questions. Hope to answer one of yours live on the air on Tuesday's show. Also, go to StockChartsTV.com. That's our on-demand platform. We have so much great content. We talked to Larry Williams when he was in our office. He's actually recording another market update, I believe, today that'll air in the next day or two. And you'll be able to watch it on demand along with all the other great content for free at StockChartsTV.com, or on your mobile device. Just search for Stock Charts TV on demand. Let's continue on our show today with our next segment, Shifting Stocks. This completes our 3-pronged approach to market analysis: top-down, macro analysis, sector rotation, and now individual stocks. I mentioned looking at what I call the phenomena stocks, and I followed along with many of the FANG stocks. I turned that into FanMag, and that was not mine. I forget who mentioned it. Someone on Twitter that I saw, I want to say it was someone like Jonathan Krinsky, but I might be misattributing that one, or misattributing that one. But it was someone that mentioned FanMag, which I thought was brilliant. Now I've changed it to Phenomena, because there's 8 stocks with those names, if you look at the first letters. And let's look at them, because I was looking at these charts, and it just struck me that a number of them are making new 52-week lows. And my general takeaway is there are areas of the market that can do just fine when these stocks are struggling, but it is highly unlikely that the broader indexes will do well when these stocks are struggling, because they are such a huge part on a market cap basis, right? There's such a huge weighting in the major indexes. It's almost impossible for the indexes to do well, particularly the Nasdaq, of course, when these big mega cap names are making 52-week lows, right? When that stops happening, you can get excited about it. That's why the middle of last week felt like just a little bit of sunshine coming into the markets, because all of a sudden they're gapping higher a little bit. But again, just a brief a brief rally resolving to the downside. Microsoft, while the S&P did not make a new 52-week low today, Microsoft made a new 52-week closing low. Apple not there yet, right? Apple's still a little bit above its June lows, but close to, sort of in the rounding error of the low from the end of September. Netflix probably one of the better, if not the best, of the phenomena stocks. Getting above 250 would be pretty meaningful for sure. That's a level we've highlighted for quite some time. Amazon back below a key Fibonacci support level. When it got below 118, we'll call it. Still above 100 is the support from May and June. So that's actually in one of the healthier positions. Meta made a new 52-week low on Friday. Did not quite undercut it on a closing basis, but it did tick a little bit lower on an intraday basis. So new 52-week intraday low for Meta. Alphabet just barely above its September low, so not quite there. NVIDIA making a new 52-week low today. Adobe really, really close. So you have three of the names making a new 52-week low today. I think three, I wasn't counting very closely, two or three really, really close. And then two of those, Netflix and Apple not to the 52-week low yet. So it tells you the situation that we're in. It's not great, right? And again, while these are not the only 8 stocks in the market, I find it very hard to believe that the major averages, particularly a tech and growth-heavy benchmark like the Nasdaq and honestly the S&P, can do well when Microsoft and the Microsofts of the world are making new 52-week lows, which is what's happening today. I did want to highlight just a couple other names, maybe that look a little different than some of those. So it's interesting. I mentioned the XLE being a very big outlier. And I think when you look at the chart of DVN or FANG or Oxy or any of these Hess, any of these oil names that we've talked about previously, you can see they very much look different. A number of them actually made new 52-week highs last week. So Hess briefly dipped above 130. That was on Friday's session. As the world was ending from a technical perspective, Hess is dipping above and making a new 52-week high. So it shows you how different energy looks than everything else. So there's obviously a lot of macro themes that play into this. This is a big part of the overall things we talked about with supply and demand with oil. I had a couple of really good discussions with Greg Schnell from Osprey Strategic, who's in town for ChartCon. We had a number of talks about energy and supply and demand and the long-term opportunity, even if green energy is still the thing and electric vehicles are still so important, there is a lot of traditional fossil fuels that are still a very deeply embedded in our economy, and it can't go away immediately, right? There's a limited supply and still very much a need for it. And the charts are reflecting that, right? Hess pulling back a little bit, just 1% down. Same with a DVN down a couple percent. But again, these are stocks very, very close to making a new high. And I think those are interesting ones certainly to watch. I also wanted to highlight today the industrial sector. If you missed ChartCon, Bruce Frazier did a deep dive on the industrial sector, which was really, really interesting. Talking about some ideas of how to scan for new swing highs and or new ideas, new opportunities within the space. I want to highlight some of the names that I thought were interesting. A number of these are up pretty good today, or outperforming the rest of the market. Look at the relative strength of Booz Allen Hamilton. This is ticker BAH. It's a 13 billion market cap name within the industrial sector. It's not one of the larger names, but certainly one of the better performers. Look at the relative strength, just moving consistently up and to the right. Strong relative trend. The momentum overall positive, but not overbought yet. And on a price basis, you pull back a little bit from mid-August to mid-September, late September, totally fair, but now rotating higher, pulling back, testing the 50-day moving average. Holds the 50-day, not a bad chart, but on a relative basis, really good. Even if it sells off a little bit on an absolute basis, not bad. Northrop Grumman is in the defense sector, making a new 52-week closing high today, closing above 500, up 1.5%. The RSI just teasing 60% briefly above there, making a new relative high. How about charts that have had a 12-month relative, strong relative trend, which is basically how I would describe the chart of NOC? Not a bad chart. And again, I don't feel like the chart is telling you it's too late. It's not even overbought. It's just making a new high after a broad consolidation. Relative strength pretty strong, which is encouraging. This is CMI, which is Cummins, 31 billion market cap name in industrials, up today while a lot of things were down. Similar to the NOC chart, you could see the pullback, but overall, nice rotation off the lows in late September. And again, relative strength, like all the industrial charts I've shown you, really, really strong. I was struck by how strong some of these relative lines are in the industrial sector. One that looks a little different, but I thought it'd be interesting to just highlight ODFL, which is Old Dominion Freight Line. This is a trucking company, and one that I remember talking with Grayson Rose about. This was back here when it was making a new swing high, getting above the 200-day moving average, testing those highs from February and March, and it's like, oh man, we're really close for making a new swing high. It gets above 330. This is a killer chart. It never did it. It actually came back down. Went below the 200-day moving average where it's remained. It actually traded up to the 50-day and pulling back a little bit. 260 is where it closed on Friday. Today, moving back higher. So I'm interested in the fact that it's actually going 3% higher on a day when the benchmarks are struggling to get back in the green. If it can get above these moving averages, the relative strength continues higher. The momentum remains relatively strong. Could be an interesting chart. And again, getting in on a weaker level after it's pulled back a little bit. So a number of industrial companies actually kind of interesting, and I think it's worth highlighting. Final thing I want to highlight is looking at some of the stocks that are up the most today. Consumer staples, as I mentioned, the best sector out of the 11 today, and it's charts like WBA, it's charts like MKC. These are coming off of really beaten down levels. So, if I'm asked, is this a good time to buy something like Walgreens Boots Alliance? My short answer would be, my first answer is I'm not going to recommend anything. That's my standard first answer. But once we get to that agreement together, I would say probably not. And the reason is because I think you have to label what happened today for what it is. This is a stock that's up one day over 4%, while the broader averages were down. That's worth noting. I mean, that's noteworthy, right? And when that happens, that's something that puts it on my radar to look at. But when you look at the trend, take a step back and look at what's actually happening with this chart. Today is a bounce off of a new 52-week low. So the most recent signal we had was a new 52-week low. The point and figure chart, I would assume, is still in a column of O's. It's still in a downtrend because even with the rally today, didn't even make it above Friday's open. So let's keep it within context. Charts like this that bounce off of the lows can be interesting, but in my opinion, they become interesting when they actually materialize much further than what we've seen so far. So caveat emptor, let the buyer beware on some of these consumer staples charts. They could end up developing into better charts, but I haven't seen enough yet to make that determination. We need to wrap the show, folks, and go to the 3 and 3. Best part of this show, the 3 charts in 3 minutes at the end, and let's get to it. Chart number 1, the VIX. Talked a lot about volatility. That was the theme of ChartCon 2022, is navigating a period of excessive volatility. 2022 has certainly fit the bill when we talk about volatility. VIX back above 30, and I think that's what you have to remember is as long as the VIX is above 30, that tells us the volatility is high. That tells us there's a lot of uncertainty. And while the market can certainly bottom in that condition, and most bottoms in 2022 have been when the VIX has been above 30, just the simple idea of it getting above 30 does not mean a bottom is in place, though. And I think that's what you have to be concerned about. There is a scenario where the VIX gets well above 30, it gets to 40 or 50 or even much higher. That's what we saw in March of 2020, where it spiked well above levels many of us had seen in a long, long time. It was almost unmanageable level. So there is no defined top to the VIX. The volatility can get extreme. At some point, the panic is so palpable that stocks are such a bargain that the buyers come in. That's what happened in March of 2020. I don't think we necessarily are repeating that. We're obviously having a very different 2022 than we did in 2020. However, high VIX means high uncertainty, and that tells you the theme of the day here. Chart number 2 is new Dow theory. This is looking at one simple comparison, really. The S&P 500 on the top, the Nasdaq Composite on the bottom. The old economy in the top half, the new economy in the bottom half. Are these in agreement? I would argue the last couple of weeks have told you yes. Both the S&P and the Nasdaq are coming off of new 52-week lows. And when that is the case, that tells you that the conditions are bearish. The last signal we got before that was a buy signal in early August when both of them made a new swing high. I would argue we've now gotten a valid sell signal when both of these indexes have gotten to a new low for 2022, and that happened last week. Finally, the chart of McCormick MKC. I had the chart of Walgreens Boots Alliance earlier. This is another staple stock with a nice bounce off of the lows, but still too early, in my opinion, to declare a bottom. A higher low, continuing to push higher and rallying, showing sustained strength. That is something to get excited about. Folks, that's a wrap for the show. Thank you so much for joining us every weekday after the close for the final bar. All of our previous discussions and some great interviews are at StockChartsTV.com. For StockCharts in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.